Good morning, Daily Rip crew. Hope everybody is having a good morning so far. Happy Wednesday. We got a market that is moving. Gosh, Netflix earnings were last night, which is obviously just having us pump in the pre-market here on pretty much everything. So, looking really good this morning. Shy, crazy night last night. How we feeling after that earnings and just seeing the pre-market this morning? I'm curious on kind of how you're feeling going into the day.
Yeah, I mean, we all have bad days at work. Just imagine being an analyst for Netflix and being that offsides on their estimated subscriber growth for this upcoming quarter. Like, net ads are supposed to be like 9 million. They came in at 18 to 19, like a little under 19. That's not just like a massive beat. That's misinformation from the street that caused them to just be completely offsides of what Netflix actually was doing and producing. I do think I take Netflix earnings with a grain of salt, mainly because there is going to be somewhat of that net ads that's called out. I do think that's somewhat of a vacuum of a lot of individuals who got an account to watch the fight, Mike Tyson fight, Jake Paul, the football games. I think we'll see in the up. I guess we won't see because they're going to discontinue sharing their subscriber growth, but we're going to see their ARPU going forward on if those individuals stayed, or was that just like a Fubo situation where people just sign up and like discontinue after 1 month? So that's why I want to see going forward. I do think that their full year outlook was bullish, but their near term one was meh, and that's primarily driven by what I was like been calling out the past week or so. FX headwinds. I do think the strong dollar is going to affect a lot of big tech Q1 guidance, and you saw that already with Netflix yesterday, where they underdelivered on their EPS. Operating margins were a miss for the Q1, but their full year outlook was a beat. That's primarily FX headwinds. So I do think it is going to be somewhat of an issue in this upcoming earnings cycle where you're going to see that commentary happen a lot on these calls where FX headwinds causing near term turbulence. Long term, we're doing great as a business. So one also area I want to call out for Netflix was remember I think yesterday we talked about this as well where there's two things I'm looking for in Netflix for the next levers to pull of that next leg of growth. It's gonna be gaming. We didn't get much on gaming yesterday, but we got, and the other was international growth. I think international growth was really great to see, especially from Asia Pacific market, where I think it went up 27% year over year. Let me pull the number up
Oh, that's
real
solid,
quick.
yeah.
So I do think that's also where a lot of the net ads came from because that demographic or that area of the world loves fighting. Jake Paul, Mike Tyson. Do you not think they're going to tune in to go see that fight internationally? I think they will. So I do think here. Let me pull this up number. So Asia Pacific, I was way up. Revenue was up 26%, but the paid net ads, like what the one metric I'm saying that was a huge beat across the board, across all the analyst estimates, that was up 70% year over year. Estimates for Asia Pacific were supposed to be 2.7 million. They came in at 5 million. So that's a 2x
Damn.
beat. So that's part of the equation. The other part was US and Canada. I mean, paid net ads were up 72% year over year. Estimates were
Yeah, it's
1.75,
huge.
came in at 5 million. So like US, Canada, Asia Pacific, those are the markets that drove this massive beat. I really think it's from the live sports and fighting. So we'll see if this continues. I do think this operating margin pressure could be the capital required to do these live TV events. Like it's expensive. It's a totally different business economics than buying content and creating a show or a movie. Like it's expensive to get these licensing rights for live sports. So if that occurs going forward, there might be some operating margin issues. But honestly, the street and like investors clearly they only care about paid net ads, and if that metric is flying, the stock's gonna fly.
Yeah, 100%. All right, well, let's pop into the Daily Rip and recap a little bit of what happened yesterday. We will talk a little bit more about Netflix as well. But yeah, here's the heat map. Really green, so looking really good. Energy not looking as good. So that's what was really taking the red, and Apple, of course. I actually personally started a little bit of a swing on some calls on Apple yesterday, but gonna be pretty short term. I'm gonna be out of those by earnings next week. But interesting to see that just really taking the red. But everything else looking good here. So love to see things looking good. Did anything really stand out to you yesterday, Shy?
I mean, yesterday, sorry, it's lagging on a bit along the slide, but
Oh, you're good.
I mean, it was a continuance yesterday. So I think it was a monster day for risk on, like a monster day where you saw Trump and Melania coin get launched over the weekend. We had Monday off due to MLK. Tuesday was kind of like where all the risk appetite finally got unleashed. The floodgates opened up for risk on. You saw space, quantum, nuclear, a lot of the small cap names who are trying to tackle the secular growth themes. We're just catching major bids. I think space stocks alone like had two or three names above 30% yesterday.
Now Rocket Lab was ridiculous yesterday.
Ridiculous. And Redwire was up 40%. Like I think you're kind of sensing it in his Trump-led presidency. The risk on appetite is there, and when you have the Fed also on our side, like I know they're right now the market's pricing in maybe a 25 basis cut this year, but still it's still they're part of the chapter of like they're going to be cutting rates going forward. So the worst is behind us. So the Fed is essentially on our side. Trump is unlaunching this like risk on environment, and what do you think is going to occur? Yesterday was a 500 billion Stargate project initiative for AI infrastructure. Do you really not believe there's going to be some funds for quantum infrastructure, space infrastructure? There's going to be. He wants to make sure, like I've been saying this, like he wants to make sure USA is in front of a lot of these key secular growth themes, and he's going to get all these billionaires and tech giants to invest with the government on these infrastructure in the US to make sure it's in-house here. So I think like there's going to be a re-rating that's going to occur across the board for space and quantum stocks because there's only a handful of names in each of those themes that are pure plays that you can invest in. Like Rock Lab and IonQ are by far the best pure play in each thematic, and they're going to continue to catch bid. Valuation is taking a backseat because you just don't know what kind of partnerships are going to happen in the next couple of years with Trump being president. And it's these companies are only they're turning to mid caps. They're not small cap stocks anymore, but still they're 10 to 15 billion-dollar companies when you're seeing Trump like launch a $500 billion AI infrastructure in his first day at president. Like there's going to be insane initiatives going forward, and you have to kind of not bite the bullet, but like valuation can't be the end all be all in this next couple of years for these early secular growth themes. It just can't. But that's what I noticed yesterday.
Yeah, good stuff. Talking a little bit more about Netflix. They shine after earnings beat. Earnings per share of $4.27 topped the $4.20 expected, while revenues of $10.25 billion beat the expected $10.11 billion. Paid memberships were the big winner, rising to 301.63 million versus the 290.9 million forecasted by Wall Street. Management touted its fourth quarter content slate, including season 2 of Squid Game, live sporting events like Jake Paul, Mike Tyson, and the Christmas Day National Football League. So all that stuff. Obviously, we talked about that. It's just really driving stock price, right? So, love to see it with Netflix. God, we were looking at that dip. I remember asking you about Netflix specifically, Shy, when we were kind of dipping down recently, and you were saying how, just looking at the chart, and fundamentally you already like it, right? But like just looking at the chart, relative to when it's really sold off, the dip we've had wasn't that aggressive to the downside, right? You were saying that you didn't really see that aggressive selling to the downside. So I think that's really what we saw here. And then obviously earnings last night just blew things out of the water way more than I expected. So
I
crazy stuff there.
I do think this move gets faded a bit.
Probably. I mean, you're going to see profit takers
yeah.
from this type of move overnight, right? People made money, and they're gonna take their money overnight. But I think overall, this is a great move, but we can trade that, right? We can trade those moves back down. That's fine.
Totally. I mean, I will say, like, I was having this like conversation with Vishal or Stock Talk Weekly yesterday on the Spaces where I mentioned like Netflix does have a moat. Um, he slightly disagreed with that, or maybe the characteristic of a moat. But like what I was referencing is they did win streaming wars. They essentially have pricing power because the increase that they've done recently, it's had minimal churn. Like it's been maybe 3 to 5% churn when they've increased to $3. That's a moat. That's a lever they can easily pull. That's the highest of highest margins possible. It's accretive. So I do think in this post AI world, especially in agentic AI world, proprietary technology or intellectual property, IP, is massive. Absolutely massive. Right now, 70% of the viewers who go on Netflix watch Netflix originals. That's insane. Where before, I think Netflix was kind of like this consolidated streaming app that had a lot of different IPs on there that consumers just went to go watch HBO shows, Paramount shows, etc. Like now, it's just like they're killing it with their Netflix
They do
originals.
kill it. I mean, the past I don't really know. I feel like the past 2 years specifically have just been really
Well,
on point. You know what I mean?
they're
Like
killing it with their international stuff too. Like I don't know how they're doing all these international shows. They're just becoming so popular. Like Squid Games obviously is the exa- perfect example, but
yeah.
we also have Money Heist. Money Heist was a great
That was
show,
a
and you have
great one. I love
yeah,
that. I At first I was like, oh, because I don't like to watch shows in like a
dub,
different language
yeah, and
and
it's
dubbed.
dubbed,
Like
yeah,
I
yeah.
just don't. It's not super enjoyable for me, right? But like that one, I they got me, man. They got me.
And they're
I really liked it.
killing Bollywood shows. Like there's killing it internationally. They're obviously replicating their playbook they've done in the U.S.
Yeah.
internationally, whatever they're doing. But that's an underrated moat that they have that you can just create fire content, Netflix originals internationally, and it's just there's so much runway for that. So like, I do think in this post agentic AI world, like that IP is so freaking valuable that they can do so much with it, interactive
Yeah.
content, license it, whatever it might be. That's something you can't replicate, and that is a massive moat. So like, even though I'm saying there probably is going to be a fade, that's purely valuation basis, purely valuation. However, long term, this is a monster. It's a beach stock. You buy and just don't worry about it. It's gonna ride into the sunset, dominating for decades.
Yeah, and just with the shows, it's just funny like how we'll even with the international shows, they're getting all of us Americans as well. Like the shows are that good that
Mhm.
they're making that we want to watch them as well. So they're doing a great job there. And yeah, love to see it. We'll see what happens with the charts over the next few weeks. But some noteworthy pops and drops: Moderna up 7%, InMed Pharmaceuticals down 12%, FTAI Aviation down 27%. What's that? Waters report alleged that the jet aircraft's lessor's financial reporting was highly misleading. Interesting. Seagate Tech Holdings up 7%, JetBlue up 5%, Pitney Bowes up 3%. Here's the big ones here. Um, Viasat up 35%. The company was selected for a $4.82 billion contract from the National Aeronautics and Space Administration. The NASA contract involves providing support to the agency's direct to Earth capabilities through near space network services. Tempest AI up 47%. That's awesome. The company launched an AI enabled healthcare concierge app for patients, sending the retail community into a tizzy. Proligious up 6%. Soundhound, that's a name we know, up 25%. The voice and conversational AI solutions provider announced a collaboration with Roadways Intelligence Systems company Wrecker Systems in retail sentiment did not reflect the optimism. Interesting stuff there. 3M up 4%. I think they had earnings yesterday, I believe, yeah. Um, so that's up 4%. Charles Schwab up 6%. Apple down 4%. We talked about that a little bit. I bought a little bit of the dip, so we're riding that out so far. We'll see how the market opens, and we'll manage that. But anything standing out to you from these pops and drops, Shy?
I mean, it has to be Tempest AI. This
Yeah,
is one that's just it's up 11% pre-market today as well. I think it's also like yeah, that healthcare concierge app helped, but I think it's also the goat trader validating Tempest AI with a call option. We had Nancy Pelosi release her new positions through her husband. Um, they bought $500,000 in call options for Tempus AI, and this is out of characteristic for their kind of investments because typically they do large cap tech. Tempest AI is a $5 billion company, 6 billion, and they're trying to apply AI application towards healthcare, and that is the one dinosaur industry that's ripe for disruption in a good way. It might take a while to get there, but clearly there might be some, I don't know, government reimbursement programs or some kind of infrastructure spend towards AI tackling healthcare, whatever it might be. Tempest will benefit off of it. So this is a name that I look at their fundamental. I think they're an incredible product, and I think it's a really interesting angle on AI and healthcare. Fundamentals held me back a bit in the past, and also their chart was really ugly before yesterday. But their fundamentals, I was just like, oh, they're growing 40% this upcoming year, but like it drops 20%, and their margins are supposed to be in the low teens by 2029. I'm like, doesn't feel fundamentally exciting enough for me to participate, even though it's healthcare AI. And the chart was disgusting. I was like, I'm just gonna monitor and watch on the sideline. But now seeing um, their chart now looks great from this gap up. Seeing Nancy kind of participate, and she just I disagree with him, but she has a lot of information that we don't have, and it's a total should be illegal, but she's doing a legal way of capitalizing on it. I do think something's going to be coming down the line for healthcare AI, and they're going to benefit off of it. But this could be another story where you don't see that materializing for at least 6 months. Their earnings seasons are just beginning. This could be one that goes up 60 or 70% ahead of their prints and just fall because nothing fundamentally changed in the near term. So that's something I'm monitoring. I do want to, again, position in this name just because my growth portfolio, I'm a thematic investor, and AI is one of my biggest conviction themes. I don't really have an AI application in healthcare exposure. I don't right now. This was my leading candidate for it, as just fundamentals and technicals held me off, but now that's a different story. So definitely a name that needs to be monitored going forward. Uh, and yeah, and Apple -4%. Hate to tell you guys, I've been saying it for since November, I think. Apple was one of the better shorts in 2025, especially in January. I said the repositioning will occur and a lot of the big tech names. Apple, it was primary candidate. You also had Microsoft, and you're seeing that take place in January. I don't like Jordan said, like he has a call option. Like there could be somewhat of a dead cat bounce because it is oversold. Like
I
Apple
think we're
doesn't.
prone for chop, though. I'm gonna be honest with everybody. Like, I think we just had those huge moves up, then huge moves down. I think this needs to breathe a little bit and go sideways. But we got earnings next week. We're at
Mhm.
these lows from November, so I'm just thinking, a little bit of a shorter term play. Maybe we get a little pre-earnings run up, and maybe just I'm looking for a halfway gap fill of that gap we made, or a full gap fill, and that'll be I'll be trimming on that majority of the position, but. Um, I really think we're just gonna end up bouncing around this area that we're in, and then really just go sideways. To be honest, so I don't think it's gonna be too much of a long trade for me. Definitely got to be out before earnings. I don't want to hold this through earnings, especially because I only have February contracts. So we'll see what happens there. But some of the economic data for today: CB leading economic index at 10 Eastern, and ECB President Lagarde's speech at 10:15. The pre-market earnings going on are J&J right now, PG, HAL, ABT, ALLY, GEV, TXT, TRV, and CMA. You guys can, I'm pretty sure, yeah, you guys can listen to those on StockTwits as well. So make sure you're checking that out. And shout out to the 200 viewers watching the stream on StockTwits. We appreciate you guys. You guys can watch the stream directly on the platform now. So pretty cool there. The after-hour earnings for today are Alcoa, Kinder Morgan, Discover. We got Steel Dynamics, SL Green Realty, and Hexcel. So
I can't wait till
plenty of.
next week when the real earnings
I
happen.
know.
That's
Okay,
gonna be
so
way
like
more
this week
fun.
is fun for sure. This week it's solid. We got some names. We had Netflix kicking it off. It was a good time, but next week is gonna be the spicy week.
This week is a soft launch.
Yeah,
Next week is the
soft
hard
launch.
launch of
Yeah.
earnings season.
Absolutely. So get ready. And if you're like newer to trading, Next week is probably not the week to press that gas pedal all the way down to the floor. I would definitely hit the brakes a little bit, maybe sit out and just kind of take a breather and learn from the price action you're seeing. I think that can be beneficial for a lot of people. Because I wish I did that in the beginning. That's for sure. Tempest rallies on the AI app news. We saw that on the pops and drops there. So that huge gap up there, and continued to have strength on that day. So we'll see what happens after breaking this trend line. I anticipate we kind of back test that trend line and end up maybe getting, like a little flag, quote unquote, just kind of pullback formation, light selling, and then maybe see if we can continue with that momentum higher. But you got to be careful with breakout trades, in my opinion. Not my favorite in here. So always got to wait for that back test at least, and study the back test, right? It's not just like, oh, price fell to my level, I'm in. It's like, no, how strong is the selling towards my level, right? Are we selling off really aggressively from those highs that we just made, or is it steady selling? Is it constructive, right? Does it look constructive price action for the upside? And if not, right, you got to be very careful with those trend line breaks. So something to watch though. If you do get that break, I think your next big resistance spots are into that $60, that $70, and then those highs around $80. So good stuff there. Any more thoughts on the chart here for Tempest?
Anymore.
Yeah,
Yeah,
I was like,
I
you
just
already
dropped
talked.
gold on Tempest.
Yeah, I was like, you already talked a lot, but any thoughts on the actual
I
chart
mean,
here?
you see what I was referencing. It was an ugly chart last week. So fundamentals, I was like, it's not as exciting. And chart was like, what the hell is happening? It's a recent IPO. There's lockup period expiration that's causes a lot of insiders to sell. I think that's what occurred a lot in Q4 of last year. I, I'd side with insiders more than what Nancy is like bullish on. So like I think there's no urgency or rush against Tempest. Like it's not going to be $100 stock in a matter of weeks, like a month. Like it needs a fundamental driver to launch it to 100. Right now, it's just recovering, and I think after 50% move, it's gonna have some rug pulls or like consolidation. It doesn't just go up double. If it does, like wow, this risk, like we are in that euphoric stage of the risk on environment, but I think it's going to probably pull back. I've been saying to my subscribers, and I'm glad I'm seeing on the chart, like 45 is an interesting entry. Like that's just an interesting entry for TEM. If you want to use the anchored average VWAP from their IPO, their 21-week EMA, now this chart like breakout and retest, 44 to 45 is the entry level for Tempest. So that's something to monitor.
Yeah, 100%. I'm with you. S&P reclaims that key trend line. I think we showed this chart a few weeks back or something, in a few shows back, but yeah, trying to reclaim that trend line there, getting in kind of a similar situation with the other chart we just looked at there, breaking out of that trend line. We have this kind of just consolidation being made. Something I want to note though, right? Since we saw that nasty day down when we were right after all the bullish price action, you see that nasty day down. Since then, it's really just been this high volatile range we've been going back and forth and consolidating in, right? So it seems like the market's kind of charging up a little bit for maybe another move to these highs. I mean, we're really close to all-time highs again, so I wouldn't be surprised if we see them. But I'm hesitant to think that it's a raging continuation over the new highs like it has been, but we'll see, right? We gotta let the price action tell us that. I definitely think you see a difference in the chart here, literally since that down day, that aggressive selling. The chart is completely different compared to when you just look left and see the constructive bullish price action up, right? Not to say that we can't go higher here, but to me, it's just I'm seeing a clear difference in the price action in the candlesticks in front of me, right? So I think it's just something to note. And a big part of that is volatility. Again, we've talked about it a ton. Volatility is really important right now to kind of keep an eye on. I put a tweet out yesterday about that, but just just I mean, when VIX is trading 12 to 16 bucks, you know what I mean? I'm trading my full size position majority of the time. And when VIX is, around that 18 to 20 bucks or over that, I just can't trade that full position. I have to size down. I'm just forced to, right? So you got to pay attention to that VIX, and let it kind of tell you how to size for the intraday at least. But any thoughts on this, Shy?
Yeah, I mean, VIX is a major tool that I use to dictate my future behavior. Like right now, was VIX a 14 handle right now? I didn't even see.
Uh, yeah, 15, 20.
Yeah,
It's
I'd
getting a pop
hedge.
right now.
I'd buy some long-term hedges just because hedging is cheap. That's literally all it is. In a Trump, I'm telling you, like in a Trump-led presidency, like it's going to be rosy, but it's also going to be very thorny. There's going to be some moments of uh-oh, slip-ups in language
Yeah,
that's going to cause FUD. I do think that this upcoming earnings cycle is not going to be as rose for big tech. It's not going to be as rosy as people anticipate. I think Amazon will dominate, but I think a lot of the names are going to have some FX headwinds that will be ankle weights on their guides for Q1. And that's going to cause a meh earnings across the board. And it's, I think Netflix is benefiting from being the first name to report. So, like, especially in a risk on environment that we're in right now, where people aren't caring as much about the near term weakness. I don't know if that's going to be the case this upcoming month. So, I don't think earnings is going to be as rosy as people anticipate because of those weak Q1 guides. But also, we had that 8% pullback already in Qs. And, like, again, history doesn't repeat itself, but often rhymes. What's occurred every single time the markets hit that 21-week EMA? Every single time. It's V shaped. It has just V shaped. And it's occurring again. And the one thing that caused the market to pull back was the 10-year treasury yield. And guess what? That's reverted back towards 4.5%. That was a major, like, people underestimate the difference from 4.8 to 4.5%. It's monumental, the difference. Everyone thinks, oh, it's 0.3%. No, it's drastically different.
yeah. It's a
It
normal
really
trader,
is.
especially like someone like me. When I first heard that, I'm like, that's no change. Like, you know what I mean?
It's
But
it's
but when you learn
huge.
about it, it's a big change
It's
for sure.
like every yeah, it's like it's huge. It's hundreds of billions of dollars. It's just it's huge. So I think that that's the metric to watch right now. Like hedging is cheap. If you can see the 10-year treasury yield going up based on some kind of macro data or some Fed commentary, get it while it's cheap because VIX will hit 20 again. I'm very confident VIX will hit 20 again sometime
I agree.
this year. So like buy hedges when they're cheap. Don't buy it when the markets pull back 5 or 6% and the VIX is above 20 because you're overpaying on your contract or protection. And you're probably gonna lose money. And a lot of people did that a week ago and they're down and they're holding the bag.
Yeah, not fun. Not fun at all. The Russell 2000 breaks key November resistance, so that's trying to peek its head over there. Similar kind of trend line break here. So nice momentum though. It had a strong close after breaking. Generally, a lot of the time you'll see, especially on a daily chart here, you'll see a breakout and it looks strong, all the way into the last 2 hours of the day, and then you get that sell off and you end up closing just kind of weak. But this closed really strong, so looking good there. Again, would like to see a retest of kind of that trend line area, or even just kind of those previous range highs around that. What would that be, like 226 basically? And I think as long as you're kind of holding that general area, this could be decent for some momentum back towards the highs, that 240 area. But we'll see. Russell is not something I trade very consistently. I'm pretty much always on the Nasdaq. But yeah, interesting stuff here. What's your thought on the small cap area, Shy? I know you kind of know a little bit more about the small caps than me.
I love the small cap area for like a theme for this year, but 10-year treasury yield, if it's an ankle weight for equities, it's an anchor for small caps. Like it's somewhat catching like specific themes within small cap are catching a bid because Trump's presidency is going to be very forward looking, infrastructure spend, etc. So space, quantum, nuclear energy, like those are names you want exposure in small cap world. But there's also if the 10-year treasury yield starts going lower, like it's trending towards right now, and like if the tariffs aren't as bad people anticipate, that's going to be a really big positive for a lot of the small caps that are in interest rate vulnerable industries like solar, industrial, EVs, etc. So like I'm here for I think the breadth is widening out clearly, and I think small caps are a great place to be in 2025.
Heard that. Amazon poised for a breakout. So yeah, Amazon. This is beautiful. I actually this was the name in my newsletter from last week. But we were trading around those lows, these range lows right off that EMA or that SMA that you see on the chart there. So beautiful long off of that area, just very clean, constructive kind of wedge. To me, it's just really consolidation, right, sideways. But holding price pretty well, and then you got bought up from the lows and over that 220, and things are right back to the highs here. So we'll see if we can really get screaming to those new highs again. But yeah, loving Amazon, looking great. There's that bell. Market's open. Oh boy. Open it up. It is time. Well, let's take a look real quick. Rocket Lab shines as a star performer. We talked about that. It was just ridiculous. I looked at Rocket Lab right at the open yesterday. I was like, oh, it's getting a nice pop.
Well, don't look
Cool.
now. It's down 6%. It's profit take. I mean, it's gonna be a
Yeah.
volatile.
Yeah, it's okay. It's okay. But and then like I remember I checked it a few hours later and I just couldn't believe the momentum that it had yesterday. It was just nonstop and just kept going all day. So love to see that. I was thinking about Shy the whole time. I was like, gosh, I missed out. And Shy tried his best to get me in it, but I
Dude,
didn't listen.
all I did on Spaces all of 2024 was like Rock Lab under 5 is going to be a ceiling. That was my jargon. I just said consistently.
Whoa, market's up, popping. Hello, little poppy. Very nice, thank you. Tesla getting a nice rip here. Coinbase getting a pop as well. What else we got? Google, big top wick. Amazon looking slightly weaker, but getting a pop. Meta looking weaker.
Oh my God,
AMD
Celsius down
weaker.
5%.
Yeah, Netflix getting that profit take, so just watch out there. That happened fast, damn. Yeah, reminder, VIX is sitting at that 1520. It did pop from that 1460. That's where it was at, like 6 o'clock my time this morning. So keep an eye on that. Nvidia starting it off strong. We'll see if we can get over these highs. Those 146. Apple trying to bounce back. I need that because I have we got some call options there. They are break even at the moment, so fine with that for February. We'll ride with those for now.
So I bought some
you're
Rocket
good.
Lab puts yesterday, so I had to close them a bit.
You're a savage. How those probably did good, huh?
Not as much as you think. 15%. It was June expiration,
IV.
but 15%. Yeah, IV spiked exactly. So I
And
was
then
like,
June expiration too. It was just I mean, obviously buying time is great, but for that one, it was
I mean,
just
it was a quick $500.
Yeah, I'll take that all day. Are you kidding me?
I will say though,
awesome.
what am I down in my Rocket Lab position today? Let's see what it is. I am down 1,500, so like only covered a third of my equity, which I probably again like that's why it's so hard the IV and contracts. Like there's nothing I could have done.
Yeah.
Rock Lab's up 30% one day. I knew there was gonna be somewhat of a pullback. I got 7% pullback, but what did that result in? 15% of profit because the IVs are so elevated. Like that's a great lesson right there where I made money, but like it's on the casino, which is selling the options. It really is.
Yeah. I agree, man. Well, what else we got? I'm potentially looking for some shorts, but if this market wants to rip, I'm not gonna fight it yet. But if I see something I like, I'm watching. ES has been the stronger asset lately. Now you're seeing the opposite. You're seeing NQ get the stronger pop, while ES is actually starting to displace lower. So I'm keeping an eye on that because that's out of the ordinary from what we've seen in the market and in the behavior from the two assets. So I want to keep an eye on that because if ES is the leader and it's starting to distribute down when it's been this stronger asset, what is that telling me? It's telling me that it could very well potentially be dragging NQ down as well. So we'll see. But nothing actionable for me yet. Um, we'll see.
As it shouldn't be. Like I think it's fun because a lot of
I take
you guys.
like if I'm gonna take a trade near the open, it's usually before the open, not at open, to be honest.
Well, I was just gonna say like there's quite like management of like companies. They have quiet periods ahead of their earnings report. Like they can't speak on anything with weeks ahead of their print. Usually that's when like a lot of short reports like to like reveal their material because they know like management can't say shit about it. Um, I kind of treat the same way where like earnings season is about to begin. I going to be on the sidelines ahead of it. Build that cash position because I own 20 names in my portfolio for my growth portfolio. I can I'm pretty confident 20% of them are going to have, maybe not 20%, 10 to 20% are going to have similar of an overreaction on the downside on one metric that was off. That's algorithm driven. I capitalize on that, take advantage of that. It's not just like my own holdings. There's going to be other holdings out there of like, I have a list of 15 names in my conviction list that I want exposure in potentially. One or two of those names are going to have a crazy 20% sell off on an earnings that wasn't thesis breaking. I want to make sure I can add that name and capitalize on the short term overreaction ahead of the long term journey of what I think they can be. So that's why I'm very timid ahead of the earnings season, and I I'm probably not gonna make any real trades. Like right now, I'm looking at my growth portfolio. I'm can't believe my eyes, but TMDX is up 3%. I haven't seen that in quite a while. But other than that, I mean, Rock Lab's pulling back. TTD is pulling back, which is surprising because Netflix ad revenue doubled in the report yesterday. But there's some profit taking occurring in TTD, which is programmatic ad. The place you want to be outside the wall gardens is TTD. So that's saying it. Interesting there. IWM is red while QQQ is up 1%. That's
Gotcha.
interesting as
Yeah.
well.
Um, Everybody in the chat, throw tickers in the chat if you guys want us to take a look at them real quick. Happy to. Feel free. But I'm just watching NQ if we want to. I have potential for a short, but I don't have any triggers yet. And seeing this bounce out of this gap I have here, it's not looking ready for me yet. So I'm just kicking back.
Holy Tempest is red now. That's a massive,
Ooh,
massive.
yeah, still looking weaker. I really want to keep note of that. We'll see. It's a pretty strong bounce out of that. Tesla starting to fade from those highs, but that was a nice rip. That 428.
Yeah, I don't know. I
Coinbase.
also that comment I made about like I'm actually at a really big crossroads because that has always been my pillar of just not adding ahead of earnings season. But I'm so freaking confident in software this year that I just don't know when that firework earnings cycle is going to be for it. Like we saw trickles of it last earnings cycle, but like I'm talking about like massive revenue reacceleration, like massive. I don't know when that's going to occur, but I want to front run it a bit. Like I think Snowflake, when I went on Fox Business to talk about it, I put my neck out there. I said I think it's going to hit $300 in the near term. I wasn't BSing. I really think Snowflake's going to hit $300 in the next 12 months. Like I think they're going to end this year with 30% revenue growth in the top line. Right now the market's only pricing 24%. I think the margins are going to have bottomed out and it's going to trickle back towards 28 to 30%. I think they're going to have a Rule 40 score of 60 plus, get completely re-rated as a stage 2 AI winner of being that AI data platform for enterprises. And that's going to cause a massive re-rating on their multiple, and that's why I'm going to $300 because I'm using comps to get there. I'm not just saying 300 like it sounds like a clean number to say. Like I have modeled out on why I believe that. So this is a name where like I want to add more, but I'm also known as a snowflake bull already, and I have a 10% position. I'm like, how aggressive do I want to be? Like 10% is significant for me. If I'm accurate and it doubles from here, 10% is going to do the trick for me. Like, why do I need to add for 12 to 15%? Like, I really don't, especially when I'm trying to build out my newer positions I have. So, like, I'm caught in a cross. I'm like, but we have some tickers we can talk about. So, let's pull them up.
Yeah, I just want to talk about Apple real quick because we're seeing a nice bounce here at the start of the morning here. So I would love to see continuation of this, especially because I am long the 235s. So I'm taking a look at those. They're not up too much, but I'll take it. I got the contracts at 252. We're sitting at 280 here, so nice little start. Nothing for me to trim yet, but picked those up yesterday and looking to hold them in the next week. So we'll see what happens with that. But TEM was one of the tickers that somebody shouted out. That was Tempest this
I'm telling you,
morning.
$45.
What's up?
I'm waiting. I'm adding.
Okay.
But it's
The
bounced. It's going to be
psychological
volatile.
level right now, $50. I mm, we're kind of been going sideways around this area, which doesn't surprise me. It's a huge psychological level, that $50, right? So, something to watch out for there. And we also have some giant moves from previously in January, um, from or no, this is intraday chart. My bad. This is earlier in pre-market, but we're bouncing right now, just from that massive move up in pre-market. So as long as we're holding that $50, I think this is okay. But I also think it's going to be really sideways price action around that $50. So got to be careful when I flip it to it daily though. You do have that gap to the downside, which I mean we generally look for gaps to fill, right? Doesn't mean this is bearish, but I would love to see that gap get filled, see some buyers at the bottom of that gap fill, and then be able to pick it up, or even the halfway retracement mark of that would be enticing. But the more we try and trade away from that gap, the more that tells me we don't even want to go near it and test it, right? If we can't get any candles, any price action towards that area, it's going to be telling me, hey, we're probably not going there. What else we got?
Yeah, IWM is just continuing to be weak. Tesla's red
Yeah, we're kind
again.
of sideways right now in NQ. Let's see. We got some other tickers. Sound. Or HWM. Let's go HWM. How am I at Aerospace? Well, intraday right now, looking pretty sideways. I'm gonna bring up a daily though. This thing's been doing really good. A lot of momentum to the upside, higher highs, higher lows continuously. So, love to see that. Oh gosh, this thing has done really well. Shout out, damn. Well, I think similar to kind of the S&P in 2024. I mean, what reason do you have for thinking that this could possibly really be breaking trend to the downside? Yeah, you just don't, right? We're at highs. This is looking great. We're continuously making those higher lows and higher highs. So I think until you see that structure kind of break and shift to the downside, this thing looks awesome. So, shout out to any thoughts on that ticker, Shy?
I've never even heard of it before.
I
But
haven't either, but it's
air,
done so well.
aerospace, I'm saying this. That's going to be a theme of that's a Trump bucket. So I think it will continue doing well under Trump-led presidency. But that's all I can really say about that. Don't know much about it.
Yeah, I get you. Let's bring up sound. We got on sound. I haven't looked at this chart in a minute, but we talked about it on the noteworthy pops and drops. So probably a good idea to take a look. Obviously, huge day yesterday. Closed really strong. Today, we're starting to get an inside day. So I would not be surprised if we kept it an inside day. Long story short, if you don't know what that is, it's just price action trades within the range that we made yesterday trading. So I very much think that we could just see that continue today and go a little more sideways. But that could set up for a beautiful play into tomorrow. Um, so I would watch for that. And if you do get that tomorrow, it's a matter of, hey, if we break over today's highs and get that back test and the momentum is there, you have potential continuation into the next daily highs, which would be like that $17.10. And then what else do I got? Be that gap fill 17.50 and then into those highs, which would be about $20. So looking for that. And then you also have a potential play to the downside. I just think with the momentum we're seeing off the lows, it doesn't look as like enticing to me, but you definitely could play it that way as well. If we open up tomorrow, same thing, but in reverse, get downside price action below today's lows. with plenty of momentum, and then you get a back test of that area, and that can be a potential entry for some short back down to these range lows of like 1341, and then what is that 1250 area around there. So something to watch out for on Soundhound. That's not a name I traded in a while, to be honest. It's been a minute.
I'm just not. I know like people are bullish on the name. I just don't see them. I just don't get excited. I don't know what's really special about their offerings. So I could be wrong. I just don't see it. Especially if, I also fundamentally I just don't see it. But ARM
Get you.
is, whew,
Arm
look at
ripping right
that,
now? Oh
14%.
boy. Oh boy. Arm, you are. Oh wow. Yeah, that's awesome. If you're investing in Arm right now, you're smiling. That's for sure. That's a
Well,
beautiful chart.
I made this post earlier on Stargate, like what Stargate means for those five names. ARM specifically is going to be the silicon blueprint of the Stargate's AI framework. Like they're going to sign the architecture essentially, the blueprint of it. It is. I've been wanting to own ARM for such a long time. It just really has not given me that pullback um, to do so. Funny how that works. Buy into strength. I need to be more confident in that. But this is a name where I just think they're going to be so essential in the in the new digital economy that maybe it just never give you that discount that you want or that pullback. And with SoftBank clearly being one of the thought partners of America's AI, ARM is going to be a big beneficiary of that because guess who owns 80% of the float for ARM? SoftBank. And SoftBank has been very vocal. They're not dumping any of its shares. They learned from their NVIDIA F up. Like they're just, if they believe in a thematic like AI, NVIDIA clearly was the AI hardware to own for the next couple decades. You don't want to really sell the AI blueprints for the next couple decades. And that's what ARM is. So I wouldn't be surprised if ARM just like holds this a bit as well. But also we have Oracle. Oracle's up 8 to 9% today off that news, and they're going to be the data nerve center of Stargate's infrastructure. Like they're going to be essentially the database of Stargate. So this is a name that I love. I wish I kind of my sympathy play on this is more on MongoDB because I think their NoSQL that MongoDB is tackling is going to be essential in the modern AI applications going forward. They're just they had a really strong print last earnings cycle, and their commentary happened on the call from the CFO that there's going to be some Atlas weakness in the near term due to year-over-year wonkiness. They're restructuring on which customers to target. It's just a lot of like noise, but I think right now this is a name like and I like to target data infrastructure names in software that have a consumption model. MongoDB is one of that. So when things are tough, they get penalized, and things have been tough in business spending the past couple of years, especially with consumption models. So they went from growing 48%, 47%, 32% to 18, 17%. This 18 and 17%, you see that downturn? That's the cyclicality risk of a consumption model. But you're clearly seeing all these billions of dollars being flowed for AI infrastructure. This is all laying the groundwork of what's going to be the crown jewel of this era, software applications. So these software applications is where AI gets introduced to permanence, and the names with their infrastructure names with a consumption model are going to benefit substantially because they're making money on data that's thin air. Like it's essentially thin air, and every day, data just it gets incrementally added and added. And when you're running queries or doing whatever compute necessary, your data requirements going to increase and increase, and that consumption model is going to be printing cash. So right now with MongoDB growing at 17% this upcoming year, I think that's really understated. I think it's going to be closer to 25%. And if that's the case, this is a $500 stock. I see someone's asking about Palantir long term. They're the operating system of AI. They've cemented themselves, in my opinion, and the market's rewarded them with a premium valuation of a re-rating that occurred in 2024. From here, trading at 100 and I think 20 times next year's free cash flow, they have to show signs of revenue reacceleration not just 30%. Like they have to show 35%, probably closer to 40% to have not a like a retest of 50 or go fill that gap in 40. Like to justify owning the being around the $70 range, $70 to $80 range, they have to show a massive revenue acceleration, and they have a white canvas approach. Like nobody really knows on the commercial side of the business what the numbers are going to be. We know the government side. I think that alone in like 10 years is worth $150 billion alone. So the commercial side is just getting started via AIP 2 years ago. So it's this valuation all hinges on their AIP on the commercial side. It just does. And my biggest worry has always been for Palantir, where they're just targeting these massive companies in these industries that are ripe for like AI innovation, but they're not really applicable as much towards like the smaller guys. Like in the agentic AI world, there's gonna be SMB, there's gonna be an explosion in SMBs. I'm gonna have 10 companies. Jordan's gonna have 20 companies. Like that's possible in an agentic AI world. Palantir is too expensive for a Joe Schmo like me or a Joe Schmo for like Jordan. Like it just is. It's the heaviest of capex requirement of any software name out there. But it's also the stickiest. Their ecosystem, you don't migrate out of. You just don't. So like once you adopt their AIP, like you just don't leave. But the issue is like I just don't think it's as applicable for the wider scope of customers, like the smaller ones. And I think those smaller ones where people like used to shrug them off, that's going to change in the post-agentic AI world. Like people are going to want those smaller names because they're going to replicate products at a rapid pace. They're going to replicate. It's just going to be an explosion like nobody can see has seen before. So I think Palantir needs to figure out some kind of consumption model for the smaller players that doesn't require such a heavy capex. And I think they will. They have incredible management. Everything you want in a company, they have. And I think they'll be able to pivot towards like the consumption models of like what Snowflake has for the SMB world.
All good stuff. NQ just made a new high. ES still lagging again. I want to note that, and just we've seen the complete opposite recently. So it has me a little cautious here with this market. I still haven't done anything, but the fact that every time we've gotten the pop, ES has been the leader. ES has been what's stronger, and that's just not the case this morning. So I'm really just paying attention to that. But also VIX is not really doing much. We're at $15 here, so volatility's back fairly low. That means I'm sizing more contracts, more full size positions rather than cutting it back because volatility is low. These candlesticks are moving a lot slower in terms of how many points they're moving. Definitely got to put more size on for any trades today. But yeah, know your environment always. But Shy, I think we're good to wrap it up unless you got any last thoughts for the crew. He's all good.
We're in the golden era of innovation. Enjoy it. Get exposure to it.
I agree. Absolutely. Well, crew, everybody trade safe. Have a great rest of your day. I hope you all make lots of money. And make sure you guys are liking and subscribing to the stream and supporting the StockTwits community. And get on the StockTwits app if you aren't. And check out the stream from there. We love seeing people tune in the stream from the StockTwits community as well. So appreciate everybody. Have a great rest of your trading day. And we'll see you guys bright and early in the morning. Have a good one, guys. Good show. I feel like we have such a good flow now, you know? Okay. Yeah. Yeah. That's fine. I'm down for that. I will say, I mean, obviously like audience engagement is just great for the stream. I mean, especially that's one thing that everybody that like would come to my stream, they loved because I'm reading every chat because like what else am I gonna do? Like you know what I mean? Like I want to see the chats because I don't have like 1,000 viewers. You know what I mean? So yeah, they love it, and I think just doing that